Hello, hello, hello. Right, let's get settled in. So in this video, I want to cover how I and how you watching this video will be able to predict direction. So this is how I find which direction I want to be trading, also how I identify when the explosive moves are going to be coming, and also which direction the explosion is likely to go in. There we go. So going to break it down into individual elements and then we'll piece them together. So it's a series of elements and they're very simple in isolation, and then combined, they really have been the best way I've ever found to predict direction, to predict or to anticipate direction. So we'll go through the individual elements and then afterwards I'll show you how I used these to anticipate where price was going to go this week, and then also how I actually took 9% out of the market last week using these. So first one, as we can see here, let me just get this. It's simply just support and resistance zones. So that is, I think this might be tapping a little bit, clipping even. Okay, there we go. So yeah, the first one is support and resistance zones. Very simply, if price is above it, I'm anticipating up. If price is below it, I'm anticipating price to go down. Then as soon as we break it, I'm looking for a retest to continue to the next one. If we're below it, I'm short biased until we break above it, then my bias switches to long. Super simple concept that we likely will already be familiar with. Very simply here, so we can actually see, so this was my zone here. You can see it there. Let me just drag it out so we can see. Here's the zone. So we were at this support and resistance zone here. And even without looking at anything else, if we can see if price was down here, this is the beginning of a new month. We're at a support resistance zone. Bias is long. Then you can see here, this is what I drew in my weekly forecast, anticipating price to come down to an area here, break above, and continue to the upside. Very, very simple concept. I tend to opt for now not having more than 5 zones on the chart. The reason for that is I used to have multiple. As you can see here, this is my maximum. 1, 2, 3, and then this is a little micro one, but 4 or 5 major zones. And you can see this is the 6th one here. It's getting messy inside there. I was optimizing before for having all the areas marked out, and it just ended up being so much noise in the chart. So now a general rule of thumb that you can use as well is limit it to 5 zones. So you can see here 1, 2, 3, 4, 5 zones. So that's the first thing I'm looking at. I'm having these areas marked and then simply just looking for price to ping pong in between those. If we're above it, I'm looking for longs. If we're below it, I'm looking for shorts. And you can see here actually on US 30. So let me just drop down so you can actually see. So price was here. And then I said short bias until we close above here. So when price is, as long as price is below this zone, I'm short. And then this week. So this was when I wrote that, short bias below that, and as we can see, price comes above, uses that as now. So when we're below, it is resistance, and then when we break above, it uses it as support, continues to the next level. So now we're currently below this, but if we do close above here, short bias until we close above here. If we close above here, I will look for a continuation long. Simple as. Very easy, simple concept. One that's often overlooked or looked down upon, let's say, in the trading community, support resistance zones. But honestly, it was using them that actually got me profitable, literally just trading between them. Since then, I've added in extra elements that actually add in the higher risk to reward, but these are what I've found to be the highest in terms of trade direction and actually improving my win rate, is only taking trades at support resistance zones, because it then means that we have the daily bias behind us, or daily edge behind us, let's say. So then the second confluence, which I combine it with, is the EMAs. So the combination of EMAs that I use is what I learned from Steve Mauro. It is these, if you want to screenshot. Oops. If you want to screenshot this combination, so it's 13, 50, 200, and 800. I do not use the 55. It's not ticked. As you can see, the fifth one isn't ticked. So just 13, 50, 200, 800. And this is how I combined with the EMAs. We can see, so once we get particular crossovers, and once they fan out and they coil together, that gives me all the information that I need. So the two, they combine too, so we can see that the EMAs travel to the support and resistance zones as well. break through, retest, continue. So we're currently at the zone now, just after breaking through. So this is now long. We can see. And basically the way that I use the EMAs is, first of all, that the most explosive moves will come out of EMA coils. So when the EMAs coil together. And the reason for that is when the EMAs coil together, it's signifying multiple timeframes syncing up, or the books shifting on multiple timeframes. That means then that price has trapped on multiple timeframes, so then we can get a move on multiple timeframes. So then it won't just be a 15-minute burst, it can be an hourly burst, a 4-hour burst, even a daily burst, or a weekly or a monthly, let's say. So the way that I use them, I'll just quickly cover it, is that I'm looking for EMA crosses. So I'm looking at once the 13 and the 50 cross. So the ketchup here is 13, the water is the 50, the earth is the 200, and the blueberry is the 800. I'll do a full video breaking down them, but just for this sake, I mark out 13 and the 50. That's my first signature, or the first indication that price is having a reversal. So this to me marks out level 1, and the market moves in threes, 3 pushes, 3 hours, 3 sessions, 3 weeks, 3 levels. So 1350 cross, that's signifying level 1 in the opposite direction. So we've just done a full cycle down. So 1350 cross, 5200 cross, EMAs fan out, and then 1350 cross in the opposite direction. So 1350 cross, so the blue and the red cross, level 1. Then when the red and the green cross, level 2. And then once they all spread out and fan out, that will mark level 3 for me. So the way that we can use these is once we have our direction or our area to take a trade from, which is our daily zones, then our EMAs tell us where we are in that move. So we reject here, so that's our direction, we're long. The 13 and the 50 cross, that's telling us that we're now in level 1. So a particular setup that I take is safety trades. So it's actually waiting for price to confirm the level, have the rejection of the daily zone, and then actually pull back to the EMA. So when price pulls back to the EMA, it's a safety trade because you're waiting for the direction to be confirmed, and then you're waiting for the pullback. So you're not buying high, you're not buying before the move has already been confirmed, you're waiting for the confirmation and waiting for the pullback. So it's a beautiful trade. So this is safety trade 1. As price pulled back to the EMA, then we break through the next level. So it's, again, we're now, when we're below, we're anticipating shorts. So that's why I didn't buy up higher than here. Once we break through, we're waiting for price to pull back to the EMAs to take a continuation. And you can see here, first safety trade, price breaks up, pulls back to the EMAs, and we push up again, and we're waiting for, again, what we ideally want is for price to print a W on the EMA. So this is a 5-minute W, this is an hourly W. So this is a absolutely beautiful trade here. So you can see before the week started, what I was anticipating is this. So for price to pull back to the EMAs to take a continuation, and that's exactly what we got. So then I just noted, so again, always using the if this then that statement. So if price does this, I will do that. Plan trade, trade plan. So I said we have an H1 imbalance below price and a flip zone. So flip zone is where price could potentially fail. If it breaks through that, I'm looking for price to come down to this hourly imbalance. An A setup is printing a W on the EMAs. Printing a W on the EMAs. This was an A star setup that actually moved with CPI. Beautiful, beautiful setup. So then here, so on Euro NZD, so I'll show you what I was anticipating based off of the EMAs and the levels. So we can see the price has 1350 cross, 5200 cross, EMAs fan out. We're now on level 3 at a daily zone. So here, price will either, so this is a finish cycle, they will either now do a full cycle down or what's called a reset, where they will then continue higher and then do another full cycle. So I was anticipating, okay, we're at the high of a month on level 3 at a daily zone. This could be a new cycle down. So here's what I had anticipated. I said, look, if price comes up to here, we can get a trade at either of these levels to go short. Price came up to those levels. Let me drop down the time frame so it looks the same. Price did come up to those levels, gave us a short trade, but didn't continue down, and it actually ended up closing above again. So then we come back to our EMAs, we print a W on the EMA and continue to the upside. So when price is above the EMAs, these are dynamic support and resistance levels. So the same way these are static support and resistance, these are dynamic support and resistance. So if we're above, we're looking to buy. If we're below, we're looking to sell. So once we break below here, we're looking at the green one. That's that. Our focus then shifts then to the 200 EMA, but we never actually break it. We stay on top of it, print a W, and now continue to the upside. So this to me now is now a new level 1 long. So I'm looking for longs on this pair based off of daily zone and EMAs. So then, like we mentioned, that the best trades will come, or the most explosive moves will come outside of coils, outside of consolidations. That's when price goes sideways, and also when the EMAs go sideways. So we can take a look without the candles, and we can actually see that they're going sideways. They're coiling, they're coming closer together. So they fanned out, level 3, and they're crisscrossing, coming closer together. That to us, that's telling me that this is about to be an explosive move. We're also doing that at a daily zone, and these two blue lines are monthly levels, so monthly highs and lows. So we're at 2 monthly extremes at a daily support resistance zone, and the EMA is to finish the full cycle. So my first trade was as the 13 and the 50 crossed, boom, 1 hour, and then a more refined entry here. This was a 1 to 2.3, and then a more refined entry as we pulled back to the EMA 1 to 8.6. So between these two entries, ended up taking out 8.5% on my funded account last week. Then that's the move confirmed. So the 13 and the 50 cross. We're then looking to the daily zones and the EMAs to look for trades from. So in the video that I made in my weekly forecast, I said that ideally, like the A star setup, double A star setup will be if price comes back down to this area here, because we always want to be buying at support, selling at resistance. These EMAs are support and resistance, as we said, dynamic support and resistance. So an ideal setup, the safest setup will be if price comes down here, because then we're buying lower. But I mentioned that price was coiling and continuing higher. So there's a strong chance that we actually won't get price coming the whole way down here. And that's what ended up happening. So let me add on I'll show you what I was anticipating. This is GBP CAD. So I said we could consolidate, potentially generate LQ, trade a clear, stop under the low. Here's what I anticipated. So price was at the level. If we come down and print a blueberry on there, or break out, pull back, and continue on this zone. Let's add on the candles. Beautiful breakout, pull back, continue on this zone, right up to the next zone, and even break out and continue of that zone here. So monster move. G-Swiss, very similar. And in G-Swiss, what I noted was that we had the 1350 cross, so we had the level here, explosive move out. Here, this type of behavior here, price continuing the coil like this, that to me is textbook that this is going to continue higher again. So the most explosive trades will come out of coils. This is a continuation coil. This is a sideways coil. This is a continuation coil. So I actually marked out that high the month of July is in sight. Although we have a lot of momentum, we may not get a pullback. So I said ideally the trade will be if we pull back to here. But in the video I mentioned that this looks like it's just going to continue up, and that it did. So I didn't actually get an entry on this because we didn't come lower. So if I was in this position, I would have held on to it. But because I wasn't, I didn't get an entry. And you can see we actually used the red, the ketchup, the 13 as the dynamic support resistance. So beautiful move, but not one that we got positioned in because it didn't come down far enough. And then again here, yeah, we can just see this was where this was. Short bias until price closes above here. We close above here, boom, immediately go to the next zone. So now our bias is long, but we will not take a trade until we break above, retest, continue. And you can see, so price in between support resistance, in between the 200 and the 800, in between the two daily zones, we print a W on the zone, boom, 1350 cross, 5200 cross, EMAs fan out. We're now at level 3 on the 1 hour. Let's have a look on the 4 hour. Same principle applies. So yeah, EMAs coil, goes sideways, boom, explosive move up. So to me, this market is now long, but we're only waiting until price breaks above, closes to continue. So today's Thursday, so I'm going to wait until Friday, until the markets close, we get our daily closures, see where everything is at, and then do my analysis for next week to then potentially see where we're going to be going. So again, planning trades, trading plans. Just a quick summary then before we wrap up. So just a very simple, clear way that we can identify our bias and which direction we want to be trending in or trading in is marking out daily support and resistance zones. So looking at the 4 hour and the daily is what I do. And I just go and look and see where has price rejected on the top side and the bottom side, top side and the bottom side, top side and the bottom side, top side and the bottom side. Once we have a bounce from the top side and the bottom side, that to me is a valid zone. Price has then reacted. It's been used as support and resistance, both sides. Therefore, it's validated. So we can anticipate a reaction from there in the future. Simple as. If we're above it, we're looking for buys. If we're below it, we're looking for sells. And like here, for instance, we have the reaction. We've finished a full cycle. We're anticipating price to continue, but we don't want to take a trade again until we have broken through and then continued up. So that's the support and resistance levels. And then the EMAs are dynamic support and resistance. So they're literally support and resistance that moves with us, and we can look for safety and continuation trades when we print W's onto them. Cool. I hope that made sense. If any part of it was unclear, drop a question below and I'll double click on that and we can go through it again. Sweet. Hope that one helped. And yeah, catch you soon. Peace.